TradewithNik here, and today we are going to discuss about technical analysis, the basic course, the part 6, that is single candlestick patterns, right? And in this part, where before starting we should revise, right? So we have seen the history of technical analysis, the father of technical analysis, that is Charles Henry Dow, the father of candlestick patterns, that is Sir Homer Munisha, and few assumptions regarding stock markets and few terms relating to trading in stock markets, right? And we have seen the how to create a short position and long position, the types of chartings, and in which we have seen that candlesticks, Japanese candlesticks, are perhaps the most accurate representation of raw price action. We have seen the candlestick formation of bullish and bearish, various time frames in which a trader can trade according to his trading style, that is monthly time frame or weekly or daily and intraday, right? Then we have started to see some candlestick patterns, right? The first is dragonfly doji, and we have seen a live example of it, and another one is gravestone doji, right? So for today's session we are going to start with a paper umbrella, right? So before getting started, please don't forget to subscribe our channel and press the bell icon to never miss a notification whenever we upload a new video, and don't forget to check out our playlist, which are the past videos, so that you will understand better. So without wasting further time, let's get started. Right, paper umbrella, we can divide paper umbrella into basically two parts. The first is hanging man and another one is hammer, right? The difference between two is that both are similar and identical, but they are found out at different trends, right? One is observed at uptrend and another one is observed at downtrend. Let's start with the first one, that is hanging man. So we can see a hanging man looks like this figure, right? And we'll see how to identify a hanging man. The wick should be, that is this area, should be twice the body. The body is this one. The difference between open and close, yes. So if you don't know, then you can quickly check out this formation of candlestick video. The link will be pop up here. And this is the body, that is the difference between open and close, as I mentioned, and the upper shadow, that is upper wick also known as, and the lower shadow or lower wick. So in case of bearish and bullish, the thing will be same only, right? So let's continue with our session. Okay, so wick, we understood wick and body. And each hanging man is observed at an upper end of uptrend, right? There has to be a preceding uptrend, and then there is a hanging man found here, and then the reversal will happen and the price will fall. So that is the expectation of a trader when we observe a hanging man. There is a long lower shadow and another, yes, and then there is no or almost no upper wick. Now it is very difficult to observe the exact or the precise hanging man, but there is almost very low upper wick, right? And it can be of any color. It can be bearish or bullish, that is green color of green color or red color, right? So how do we trade with what is the logic behind a hanging man, right? So bulls will push the market up, and the bears will fight strongly to reach at least 50% of the level, and longer the shadow, more effective the bearish trend, right? And let's take how we are going to trade. So look for it in an uptrend and wait for the next candle to close below the low of hanging man. Then we will take the short position below the low of hanging man, and the stop loss will be above the high of hanging man. So we'll place we will start our position from here, and we'll place a stop loss here, right? Yes. So this is how it is going to be traded. Well, it is a trend reversal pattern, right? We have seen there are two types of patterns, that is reversal and continuation. So it is a reversal, and the reliability is moderately high, not as good as a doji, but it is high. Now let's see a live example of a hanging man. This is a nifty daily chart. Let me just zoom it out. Yes. So yes, so this is a nifty daily chart, and as you can see here, there is a preceding uptrend, and then there is a swing high, and there we have our hanging man. Right. So what I have done is I have shorted the position below this below the low of hanging man, and kept a stop loss above high of hanging man, and we have maintained a risk to reward ratio of at least 2:1. So here, as you can see here, it is mentioned, right? So we have gained around 250 points in Nifty for trading about, for at least 7 to 8 days. So that is a good risk to reward ratio as well as the trade, right? Earning 250 points from Nifty is a really good trade in a such short period of time. So that is how trade would practically work in the trading scenario. Right. Let me just get you back to the man. And okay, so let's understand the hammer. That is another part of this paper umbrellas. Right now, as you can see here, it is absolutely similar to the hanging man. The only difference is that it is again there is the wick is twice the body, and it is observed at the bottom end of downtrend, and there is a long lower shadow and almost no upper wick, as I mentioned in the previous one, and it can be of any color, that is green or red candle. Right. So the first thing is that what is the logic behind it, right? The bears push the market down, and the bulls have fought strongly to reach at least 50% of the level, right? And the longer the shadow, more effective the bullish trend. Let's understand how to trade a hammer. Look for a hammer in the downtrend and wait for the next candle to close above the high of hammer. Right, so take a long position, that is from here above the high of hammer, and keep a stop loss below, that is here of a hammer. Right, and then you will maintain a risk to reward of 2:1, and where you will take your profits. Right, so let's try and understand how it works. Right, that it is a trend reversal pattern, and the reliability of this hammer is moderately high. Right, again, as I told you, like dojis. Let's understand with a live example. I have marked an example. Okay, here it is. So there was a preceding downtrend, and we have observed the hammer position here in the preceding downtrend, and all the conditions are met. We have placed a long position above the high of hammer and a stop loss below the low of hammer, and we have kept a risk to reward ratio of 2:1 precisely, and we have achieved a beautiful target, as you can see here. Right, so this is how we can trade with a hammer. Right, in this case also it is around 220 points in Nifty in a short period of time, that is almost 5 to 7 days. So that is a good profit, and if I calculate profit, it will be very good. It's 220 into 75 will come down to 16,000 rupees, right? So this is how the the trade setup works in this, right? So that is the end of the video, and we hope to see you in the next one. You can email us and you can WhatsApp us also, and make sure to follow us on our social cover. Our handle is TradewithNik, and the links are given in the description below. Wish you all a very happy trading sessions, and see you in the next one. Goodbye, take care.